Little Rock was a quick recovery apartment market coming out of the recession, but it's run into some trouble over the past couple of years. What's going on in the Arkansas state capital? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Little Rock update. Apartment demand has been consistently solid in Little Rock, but it hasn't been enough to keep pace with a consistently sizable volume of new apartment supply. And as a result, occupancy has dropped off and rent growth levels have cooled. Take a look at occupancy trends to start with. You see occupancy hit 94% back in Q2 of 2011. And at that point, Little Rock was one of the top performing tertiary markets in the country. But since that point, occupancy has dropped off by 260 basis points, and it's been a consistent drop off. In Q3 of 2013, occupancy did actually climb up a little bit, up 20 basis points to 91.4%, and that did snap a streak of 8 straight quarters without any occupancy growth at all. But it's important to note that during that 8-quarter cold streak, apartment demand wasn't bad. In fact, Little Rock actually absorbed about 800 units, but the market also built about 2,200 units, and that's why occupancy dropped off. And the supply story has had a similar cooling effect on rent growth. Rent growth reached as high as 3.9% annually back in 2011 when occupancy peaked, but it's really dropped off as supply became a factor. And most recently, as of Q3 2013, rents were up just 0.5% year over year, one of the weakest numbers anywhere in the country. And furthermore, what's been interesting and somewhat unique in Little Rock is that the cool down has come across the board. Now, what we see in a lot of places where construction is a factor is that the slowdown predominantly affects the top end of the market. But in Little Rock, the pricing gap between the newer high-end units and older, more affordable units is actually fairly small. And so the effect of new supply has actually been widespread from the bottom to the top of the market. Now, one spot in particular that's added a good bit of supply where we see this story play out in the past few years has been West Little Rock, Saline County. There we see occupancy at just 91.5%, whereas it was around 94% a couple of years ago. Occupancy fell 230 basis points just in the past year, while rents got cut as well, down 2.1%, the deepest cut among Little Rock's 4 submarkets. And it doesn't look like the story for Little Rock's apartment market is going to change much in the near term. Another 1,200 units are under construction. Now, the economy here is actually doing pretty well. Little Rock's adding a good number of jobs, and it's actually recovered all the jobs that were lost during the recession. And so once development slows down, apartment fundamentals should pick back up. But until then, it's looking like apartment revenue growth should remain pretty modest. And that wraps us up for Little Rock. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.